Hello and welcome to Business Incorporated Live on Channels Television. We see the trading day moving along fast, but here's what's coming up in the next 55 minutes. As the world celebrates Children's Day, we discuss the economics of childcare. And the price of a 12.5 kilogram cooking gas cylinders declined by 13.3% year to date. Plus, Rwanda explores vehicle-to-grid technology to boost EV ecosystem. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's played out with the markets now. Starting from earlier today, we saw weakness in the oil market, and that has continued 0.19% down for Brent, $64.62 a barrel. WTI is still the biggest drop there, 0.24%. At $61.38 a barrel. The Organization of Petroleum Exporting Countries and its allies, collectively known as OPEC+, they're likely to finalize the July output plan that's for that meeting, and we'll see if there's going to be more output, coming into the market. We see how that's already impacting the price of oil. And on the flip side, to the metals market, we see gold prices decline more than 1% as the dollar's reversal to trade higher. That added pressure on the safe haven asset following U.S. President Donald Trump's less aggressive trade tariffs. So it's red across board. The biggest drop there we see with palladium losing that $1,000 psychological level. Spot gold is down 1.2%, big drop, but still holding on to that $300 level of the $3,000 level. 1.9% U.S. gold futures, and that's also down. And spot silver not able to shine, and that's $33.14 per ounce, 1.35% down. We see prices have softened on Monday, as well as after Trump retreated from his threat to impose new tariffs on the European Union next month, instead reinstating a July 9th deadline for trade negotiations. U.S. dollar index, that reversed earlier declines to trade 0.3% higher, making the greenback priced gold more expensive for overseas buyers. All right, to other matters now. See, the World Bank has called on the Nigerian federal government to issue a presidential directive directing excise duties, that's increasing those duties on sin goods like alcohol, tobacco, sugary beverages, as a key condition for unlocking a $750 million loan aimed at boosting the country's non-oil revenue. This directive is outlined in the bank's latest implementation status and results report for the Accelerating Resource Mobilization Reforms Program for Result, which became effective on October 14, 2024, and is scheduled to close by November 2028. According to the report, at least $10 million in loan disbursement is contingent upon the issuance of this directive. So far, Nigeria's received only about $1.88 billion, 0.25% of the total loan, through 6 reform milestones valued at $235 million have reportedly been achieved and are awaiting verification. And the federal government has launched the Nigeria East Southern Africa Market Intelligence Tool, a platform designed to empower Nigerian businesses with the data, insights, and confidence to explore and expand into new African markets. Speaking at the launch in Abuja, the Minister of Trade and Investment, Mrs. Olajumoke Oduwole, explains that the initiative is part of efforts to unlock access to the $3.4 trillion African market. The Market Intelligence Tool, co-created with the United Nations Development Program, is a working document that gives exporters the insights they need to make real-time decisions. Our correspondent Sarah Chimago reports.
This is a follow-up meeting to the launch of the new air corridor that will provide Nigerian exporters with access to 3 key African hubs, namely Uganda, Kenya, and South Africa. The ultimate plan is to improve Nigeria's agricultural exports to Africa, which is standing at $180 million in 2024. Regional demand exceeds $3 billion, according to the Federal Ministry of Industry, Trade and Investment.
We have the population, we have the talent, we have the vision, and now we are putting the systems in place. So today, we launch more than a market intelligence tool. We launch a signal that Nigeria is serious about trade.
Some key aspects of the market intelligence tool covers areas such as key markets in Eastern and Southern Africa, with practical, sector-specific insights, regulatory requirements, trade trends, and potential sectors.
Nigeria must aim to
The minister also announces plans to expand the trade corridors to West and Central Africa, amongst others.
In cosmetics, Nigeria is home to over 250 indigenous brands, yet our market penetration into Eastern and Southern Africa remains below 5%. This imbalance represents more than a gap. It is an opportunity, an imperative to move up the value chain.
The launch of the corridor guarantees air cargo discounts between 50 to 75% in logistics costs, and there are optimism that it will boost trade in Nigeria.
Our recent achievements in exports facilitation, including a remarkable 233.8% increase in export volumes and 219.5% growth in export value in 2024, are indicative of the readiness of Nigerian business to leverage continental opportunities.
223% increase shows there are huge opportunities, and that is why I say that this program is a game-changing initiative.
The Nigeria East Southern Africa Market Intelligence Tool is then launched. This is expected to improve Nigeria's trade and exports. Sarah Chimugu, Channels Television News.
All right, so our first conversation now is Nigeria marks Children's Day 2025. The conversation around childcare extends beyond celebrations to its critical role in shaping the nation's economic future. With over 31 million children under 5 and only 10% in licensed care centers, Nigeria's childcare crisis is not just a social issue, it's an economic imperative. The recent SAL commitments by West African governments, including Nigeria, highlights childcare as a cornerstone of human capital development, gender equality, and GDP growth. Meanwhile, initiatives like the relaunched National Homegrown School Feeding Program, they aim to combat malnutrition while boosting rural economies. Yet challenges, persist, like underfunding, workforce shortages, and systemic barriers, keeping millions of women out of the labor force, costing Nigeria billions in lost productivity. Well, joining us to discuss all of this, we have Ola Oladele, the founder of the Money With Club. Join me via Zoom. Great to have you on the show, Ola.
Thank you for having me, Ladi.
So
happy Children's Day.
Yeah, happy Children's Day. Yeah, wish I had some candy here to really celebrate, but I guess we'll get that later. But we see the average parent is dealing with a lot right now, even though some things have kind of stabilized in the economy. That's looking at the macro side of things. You're dealing with inflation, you're dealing with high energy costs, you're dealing with band A costs, and a lot, food, all of that. And now you have to pay really expensive school fees. So it's getting really expensive to do a lot of things. And I guess childcare is one of that.
Yes. I mean, everything that has happened in the economy, and I dare say the global economy, has impacted the ability of parents to take care of their children to the extent that they would want to. And so we have found that in some cases, children have to to go to school without enough food or without food at all, or have to downgrade on the quality of school they would otherwise have been going to, or even things like the level of care or entertainment or enjoyment, for lack of a better word, that parents would have been able to afford their kids. The economy has impacted parents, and that's on one side. The other side also is the fact that women are fundamentally kept on hold when the children are a certain age, a lot of times, and that also impacts the economy. It's also a cost to the family's finances.
Right, and talking about women, at this point, and the whole conversations about gender equality and supporting, all genders at this point. Definitely, getting a daycare or trying to keep your child as a woman while you're at work is that's also becoming quite expensive at this point, which is, not allowing women to participate as they would like to in the workforce. So what would you say is the short-term solution, for that, from a policy direction? What do you think can happen there?
From a policy direction, we can take a cue from other more advanced societies where when kids are below a certain age and the government recognizes that at this age they are forced to have extra childcare, or they need childcare. There are subsidies that are given to parents of children of that age bracket. Another thing also could be around the government enforcing that companies within a certain revenue bracket make provisions for people that have children under a certain age level or age bracket. What that does is that as a woman, if you're going into work, you know that your child can come with you and have a place where they'll be taken care of until the child gets to that point where they can enter into school, such that you are still able to work. And your child is well taken care of and is close by enough for you to check in, and so your mind is in a good place. So those are the kind of policies that the government can take on to help the burden.
Right, subsidy definitely would be needed right there. But, talking about, in economics, we talk about scale of preference, when you're trying to manage, resources and all of that. But, coming to the whole price, and demand destruction, we've seen prices of a lot of things go up a lot. And at the same time, as a parent, you're trying to balance, sending your child to a good school where they can get the best education. Talk to me about how parents can actually, balance this well so that the children don't suffer, even though you're trying to deal with a lot of other big expenses.
So what I generally tell parents is focus on your why for different stages. A child that is in elementary school, the major outcome from elementary school is knowledge of math and English, verbal reasoning. There are some basic things. Now, you might want your child to go to a certain school, which is more expensive than what you can afford. But if you can find another school that would offer that at that stage, then you might want to jump at that. Why? Because in the end, the financial pressure would hit you in another way, either in family pressure, either in tension in the home, or even in just the ability to eat in the end. Or you might be going to an expensive school and they say there's this thing that they want all the parents to pay for, and then your child is sad because there's nowhere to scrape from to pay for those things. Or then you go into debt. These are the things that happen. But if your child is in primary school and you can find a school that will guarantee the basics, the fact that your child would learn how to read, write, understand their mathematics and their verbal reasoning, and you can augment at home, go for it. By the time you get into secondary school and you're thinking about socials, you might say, okay, I need to reconsider the type of school. Then maybe if you've saved from primary school, you should or you could have money to afford something that would meet your needs on a bigger scale in secondary school. But the idea is look at what you are after, the most important thing that matters. And then the other things that you would like to do, make them secondary. And as long as you tick the right boxes within a budget that you can afford, then go for it.
All right, so, talking about not able to afford some things as a parent for your kid, or, some things that come up in school. And do you think children are at risk of being bullied, by other children when their parents cannot afford something that the school actually, needs them to pay for? Do you think that kind of thing happens with most of these kids?
Well, I'm sure it happens, but I think that bullying is a bigger conversation than the parents just being able to afford things. You will find that in schools where the parents are not broke or anything, there's still bullying, right? So bullying is almost like a confidence / system or school system around it, or school structure around it type problem, as against the parent being able to afford one thing or the other. Maybe teased, maybe the child can feel left out of social circles, things like that. But bullying in itself, I think it's more about systemic issues within a school system than just about the parent not being able to afford things.
Right, it's quite incredible. Sometimes you hear what some of these kids talk about. It's quite interesting. I've heard a lot of things, from, some of these kids. But how do you think, governments and, businesses can collaborate to somehow support childcare?
I think the first thing is awareness. A lot of things go on as they do because people don't talk about it enough and people struggle in silence. So the first thing is awareness. This conversation we're having and highlighting the impact of the economy on families and on childcare is a good conversation to have. That's one. The second thing also is that the government needs to establish policies like the things that I have highlighted before that would actually help families because it's a major problem, right? It could actually help families. And then on the other hand, companies also have their role to play in terms of how do you create a good working environment for the women, especially to be able to take care of their families and not have to resign, because that's the major thing. Once a woman has to resign to sit down at home, it affects the woman's mentality or mental health. One, it also affects the family's financial situation, and then it affects the children. So if we are able to create that system where either you're a civil servant or a private sector worker or a business person, there is something within your area that you can fall back on. The fact is that Nigeria as a structure, as a system, a society has changed. There was a time when grandma would come and stay, right? Or one auntie, would host one auntie or cousin or younger person, and the child and that person would help you bring up your child or oversee them when you are at work. But those systems have changed, and we all know the nasty nanny stories that we get to hear intermittently. So it's a really tough situation. So if everyone takes up their own part, first in speaking up, second in government policies, third in companies actually making provision for this and being aware of the need, I think we would see improvements over time.
It's quite interesting with the nanny situation. At this point, I see some families having to have like more than 10 nannies in 1 year because they keep going after a while. Let's look at, you see, UNICEF, they're estimating that quality early childhood services could raise, Nigeria's GDP by 1% through increased female employment alone. So how can policymakers prioritize, childcare investments? We know the government, they seem to be struggling with revenue, right now. So how do you, balance competing budget demands as a government to make sure you're also prioritizing, childcare?
I think where this comes in is in public-private partnership, one, and also in grants and funding. You might not have the funding or the budget allocation to support subsidies for childcare, but you have a position where you can engage development finance institutions or development institutions and say that this is what we're trying to do to support women and children in this space, and this is how you can help us, right? And it could be something as simple as tax rebate for childcare companies, right? Or things like that that may not necessarily require the government coughing out cash, but making it more conducive for more people to go into childcare as a business, standardizing the industry as acknowledging that the industry exists and is needed and is a key part of the society and development. That's a major thing, actually. And once they do that, then, and women know for a fact that I can get a nanny that will be professional, I can pay her. I don't need the government to subsidize, but if I know someone that will give me peace, that in itself is a breather. So these are ways that it doesn't necessarily have to come in terms of cash payouts from the government, but there are things that can be put in place that would help the situation.
All right, definitely. Well, we're hoping everyone, gets happy at some point. And the parents can get what they want, the kids can get what they want, government and everybody, private sector. Well, thank you so much. It was great having this conversation with you. Ola Oladele is the founder at the Money With Club. Thank you for coming on today. All right, we'll take a break now. When we come back, we head straight to the markets and find out what's playing out there. That's in a moment. Do stay with us. Welcome back. Well, it's all about new highs in the market right now. Willie Bong has the details. Good to have you, Will. Hope the new high is not getting you high.
Oh, I'm really tipsy right now. I'm just trying to get myself my equilibrium, just trying to make sure that I don't fall, because it's like we are hitting that high and possibly will go higher if the investors and market traders,
speed,
will just get us there and sustain that trend. That's all we want. The market play out today will definitely determine if we're going to hold on to that high or if it's just a fluke in the market.
All right, we'll see.
Okay, so we just begin with major equities that we track in Africa. They performed mostly positive at intraday. We saw sentiment in that direction. Nigeria's NGX was up at intraday 0.2% and hitting an all-time high of highs, 110,000 points. And this is like high on highs. Laddie's just mentioning that, a bit tipsy about that. Yesterday, the NGX hit a new record high, and this is a consolidation of the gains sustained at the close of the bell. Now, Aradel continues with an upward trajectory from yesterday and has gained about 476 basis points. Okomu oil is currently up to. Activities are still quiet for consumer goods stocks though, but banking is up about 22 basis points, and this was driven by gains in Fidelity Bank, Zenith Bank, Access Holdings, and GTCO. Now, looking at South Africa's JSE, on the flip side, was in the red at intraday, down 0.09%. Elsewhere, we see Egypt's EGX also trading up at intraday, 1.39%. Meanwhile, the Nairobi Securities Exchange closed Tuesday session in the red. Now, to the bond space now. Let's look at how investors' appetite for Nigeria's shorter-term debt, that's the bond market, appears to be fading fast. The latest FGN bond auction that was on Monday saw a dramatic 83% undersubscription for the 5-year paper. Joining us to give us more insights is Chuka Nwachukwu, is the head, chief dealer and group head trading at UBA. Good afternoon, Chuka. It's good to have you on the show.
Good afternoon, Will.
Okay, so Chuka, what's behind this sharp drop in demand for federal government, the 5-year bonds? Is it just about rate expectations now, or are investors signaling deeper concerns around short-term risk and possibly policy direction?
Okay, thank you very much, Will. Basically, investors always look for opportunity, and then why buy a bond of 5 years at 19 levels when you can easily buy a bond of a T-bill or OMO, especially at 24.5 levels. And so it's all about interest. Investors are always looking for opportunities, to take the opportunity. And so I guess that's one of the reasons why it's
okay, so we saw also that are you still speaking? Okay. Okay, I just want to know, is this drop for the 5-year paper, does it suggest that investors are not fully convinced of the risk in putting their money in that particular instrument in terms of government-backed payment?
Yeah, so basically, what it meant is that the government itself, is looking to borrow heavily in the fixed income market, and so the interest, especially on the 7-year bond, is as a result of the coupon. The coupon is very attractive. And so most investors obviously will want to play in that field because of the coupon. And then after that, the interest on the 1 year, on the 5 years, like you said, it's quite low based on the fact that 1 year OMO is around 24%. But for the 9-year security bond, especially, the interest is much because of the fact that the yield is attractive. And then, of course, most investors are on the long side of investment.
Why do you think this is? Why are investors leaning more towards the 9-year bond? Because it's a longer term to put one's money to tie it down. The shorter term should give better returns, but why are they leaning towards the 9-year? Is there any particular reason right now?
So that's the thing. It's all about interest, like I said earlier. The 9-year has a better coupon, and so it's more attractive. And don't forget that most investors are also on long-term investors. Most bond investors are long-term investors. And 33, for example, we up dropped to around 12 levels. So why not lock in now and then reap the benefit within the before the end of the year, which obviously we see downward trend in the yield.
Okay, so looking at, you mentioned the OMO auction, which also took place yesterday. When you compare the rates, it would appear that the DMO, in terms of looking at the bond auction, is being rather conservative with allotment and stop rates here, don't you think?
Let's see.
Yeah, I think that it's what has played out is the part that they obviously don't want higher youth to go for this youth to go higher than this. The reason being that, of course, it means that the government will have to pay more in debt service. And so that's what they are trying to avoid. However, on the OMO side, the CBN, which obviously offers OMO, has other interest, which is obviously trying to attract FPIs to come in. And so they have to make the OMO rate, very attractive for investors to come in and then bring in these much needed dollars.
So how's the liquidity influencing market buy decisions right now? Because obviously today is Children's Day. Our parents buying in the markets based on the market liquidity in the system. Chuka, can you hear me?
Yeah, the liquidity, as a trader, you know that liquidity is key. Yes, I can hear you. So, like I said, as a trader, liquidity is very key. We saw system liquidity is up about 2 trillion yesterday, and that is why OMO was offered. And so liquidity has actually affected sentiment yesterday in terms of the OMO auction, in terms of as well as the bond auction. So liquidity will continue to play a major role. And so, most banks and once liquidity is available, they try to invest in some of these long dated securities. You will have a yield about 19%, 24% on the OMO side. So it's best to just utilize it and then make further profits in terms of investment.
Okay, so thank you so much, Chuka, for your time this afternoon. It's beautiful. A shame the internet would let us have a longer conversation, but we'll definitely continue this to see the direction the federal government goes in terms of borrowing and managing the borrowing cost. Thank you so much, Chuka. Nwachuku is a group head and group head trading at UBA. He's also the chief dealer. Thank you so much. So let's look now at the Middle East markets. We saw mixed trading there for major stocks that we track in the Gulf. Dubai up 0.33%, Abu Dhabi up 0.1%. Now still within the region, tracking Saudi, that's the Tadawul in stock exchange. They were in negative trading, in negative direction. We see it down at intraday. Qatar is also down 0.78%. Now stock futures, let's zoom in on the US now, jumped in pre-market trade after President Donald Trump said over the holiday weekend that he agreed to delay tariffs of 50% on European Union until July the 19th. That's imports from the European Union. Now, Dow Jones Industrial Average Futures added 1.23%. We saw the S&P 500 futures climbing 1.38%, while the NASDAQ 100 futures popped 1.49%. Now, Tuesday's action follows a losing week on Wall Street. The Dow, S&P 500, and NASDAQ composite all slid more than 2% as Trump calls for tariffs on the EU. The U.S. stock market was dark on Monday in recognition of Memorial Day. Now, traders this week will follow earnings from Okta due after the bell today. That's Tuesday, followed by companies such as NVIDIA, Macy's, and Costco later in the week. More than 95% of S&P 500 companies are reported this earnings season, and almost 78% have surpassed analyst expectations according to facts sets. Now, let's move on to Asia now. The markets, and see how they closed today. It was mixed for that region. So investors continue to assess the global trade climate after U.S. President Donald Trump delayed 50% tariffs on European Union imports. Looking at Japan's benchmark index, it ended up about 0.51%. However, the Kospi in South Korea fell 0.27% to close at 2,637 points. That's reversing the course from its 3-month high in Monday's session. Now, Hong Kong's Hang Seng Index gained 0.43%. But on the flip side, we saw mainland China's Shanghai Index retreating at 0.18% to close. China's industrial profits rose 1.4% in April compared to 0.8% the month before. Meanwhile, India's benchmark Nifty 50 declined 0.7%. We are definitely going to be seeing how these tariffs, global tariffs, are impacting investor sentiment. But there's a lot to unpack there, with consumer and inflation indexes coming up a bit slow and a bit high for most regions, and we see how that has influenced, traders and marketers, or market players in the investment space. Ladi is always saying that follow the market, follow the trends, and see how that sentiment is, know when to push the button, sell or buy. But right now, maybe we need to, like you said, be on Truth Social, so we just get the ingest before the markets gets frenzied up.
Get it fast, so you make that decision
before that.
Quick. Thank you so much, Will, for the details there. What's playing out with all of those markets. Well, let's head over to Berlin now for a look at how European markets are doing today. We have Chiponda Chimbelu, a DW correspondent. Great to have you, Chip.
Hi, Ladi.
Hi, how are the European markets, how are they trading?
Well, European shares, Ladi, are trading higher today, and the continent-wide Euro Stoxx 600 is actually up around 0.5%, and Germany's DAX is also trading higher at 0.7%. Now, Wall Street is, of course, closed today for a public holiday, so there is not much to help stocks with direction later in the day as well. And in terms of economic data, we had French inflation figures here in Europe, and France's inflation fell to 0.6% on the year. Now, Germany, Italy, and Spain are also slated to release their May inflation data on Friday, and they're expected to be below the European Central Bank's target inflation of 2%. So the ECB, though, is still expected to lower borrowing rates next week, Thursday, to 2%.
All right, so turning to the auto industry now, the latest figures show that new car sales in Europe, that fell in April. What can you tell us about that?
Yeah, new car sales, Ladi, in Europe contracted 0.3% last month. And while that might actually look like a slight dip, it is a major concern for the industry because it was the third month of contraction this year. Now, car sales fell in January and February too. Demand for new vehicles is falling amid the ongoing tariff dispute with the United States. And Europe's car makers are, of course, also facing more competition from China, especially in the electrical vehicle segment. Now, meanwhile, European car makers have actually been announcing cost-cutting measures now. And on Monday, Swedish car maker Volvo said it is planning to cut 3,000 jobs. And of course, other car makers too are cutting costs, including, of course, Volkswagen, Mercedes-Benz, and Stellantis. So, of course, it is tricky times ahead for European car makers, Ladi.
Right. I see the competition is stiff there, but what are the trends so far?
Well, the biggest decline in new car sales was actually in the combustion engine vehicle segment. And that decline was so significant that it offset the growth seen in the EV segment, which accounted for 17% of all sales in April. And the sales of Teslas have continued to tumble here in Europe, and they were down nearly by half in April. Now, many experts have, of course, pointed out that European buyers are turning away from the EV maker because of its CEO Elon Musk's links to the US president. And of course, Musk has received criticism too for weighing in on European politics with his support for far-right parties. And that, of course, may not have gone down well with EV buyers because it is a demographic that is likelier to be left-leaning. And now that Tesla is selling fewer vehicles here in Europe, it was also overtaken by the Chinese EV maker BYD for the first time in April. BYD's car sales in Europe surged 169% last month. month, and it's, of course, confirmation that Chinese players may be the ones to beat in the EV segment. And while there have, of course, been moves to curtail that, the Chinese EV makers here in Europe with higher tariffs on Chinese EVs since last year, Chinese car makers have, of course, pivoted also to another segment where they're doing well, and that is with plug-in hybrid vehicles. And of course, now the question, Ladi, is how and whether European car makers will be able to catch up with their Chinese peers and overtake them amid all the challenges that they are facing with those US tariffs and, of course, with their own structural issues.
All right, definitely so much to unpack in that industry, and definitely a big risk, as a business owner, getting involved in politics like we're seeing with Elon there. But thank you so much, Chip, for the details in Europe.
Thanks, Ladi.
All right, to other stories now. See, South Africa has offered to buy liquefied natural gas from the U.S. over 10 years as part of a proposal to secure a trade deal. According to a ministerial statement posted on the government news agency website, a document signed by the minister and the presidency, Kumbunzo and Shaveni, and posted late earlier in the week. It says it aims to import 75 to 100 petajoules, roughly 75 million to 100 million cubic meters of LNG per year from the U.S., the world's biggest LNG exporter. The trade package was proposed by by South Africa during President Cyril Ramaphosa's visit to the White House on May 21st, when President Donald Trump confronted him over government policies such as land reform and black economic empowerment, made false claims about a genocide against whites. All right, let's get to the commodities market now, find out what's playing out there. We have Rosemary Ahira. She's an analyst with Financial Derivatives Company. Great to have you, Rosemary.
Good afternoon, Ladi. Thank you for having me.
Good afternoon. So we're seeing, I guess, good news, at this point, 12.5 kilogram gas, that's dropped by 13%. Year to date. What's driving that, and is it sustainable?
Well, if we look at the global economic climate, we are currently experiencing a demand slump between the winter and the summer demand peaks. So there is not really a lot of demand for LNG because cooking gas, LPG, is a byproduct of LNG, which is liquefied natural gas. So since there is a demand slump currently, there is oversupply. There's currently a lot of supply, and which has beaten down the price. What even worsens this phenomenon is the fact that Nigeria is a key exporter of LNG to European countries. So there is excess supply domestically. So this is currently beating down the price of cooking gas. And yes, it will continue until we experience another summer demand peak, which will happen maybe between August and September of this year.
So I guess that downward trend could, switch at some point if supply cuts back. But we know over 65% of Nigerian households still rely on, traditional form of cooking for their food, preparation needs. And, it's reinforced that there's also that belief that, food cooked with, cauldron firewood has, better taste and aroma. Is that still the narrative, at this point? Are people, ditching gas, more people in Nigeria ditching gas for firewood?
Well, Ladi, aside from the obvious health risk associated with prolonged exposure to toxins from the smoke and shoots from these burning fossil fuels like charcoal and firewood, for instance, you also have urbanization. So people are now living in flats, and there is no room to store coal pots and heaps of firewood for cooking anymore. So people are now transitioning to gas. And we also have some deforestation concerns as well. And Nigeria is currently losing about 400,000 hectares of land to deforestation. And this is particularly worse in the northern and south-south region. So if we consider these factors, you see that there is a gradual shift from these traditional forms of preparing food to more modernized forms like using cooking gas in food preparation.
All right, thank you so much. That was Rosemary here, she's analyst with Financial Justice Company. We'll see if those prices continue going down. Thank you.
Thank you for having me, Lad.
All right, so to other matters now, City African Development Bank Group has approved a $10.12 million grant to boost sustainable agricultural production for rural resilience in drought-prone areas. The project, which starts next month, is expected to be completed December 2029 and will directly benefit 7,000 livestock farmers and 42,000 smallholders and crop farmers in Zimbabwe. The Zimbabwe Agricultural Value Chain and Livelihoods Enhancement Project will enhance sustainable crop and livestock production and productivity, improve market access for agricultural products, and strengthen value chain integration for micro, small, and medium-sized enterprises in the agricultural sector in Zimbabwe. Rwanda is exploring the feasibility of a vehicle-to-grid technology, which allows electric vehicles to not only receive power from the grid for charging, but also to send it back in case of need. This bi-directional charging system treats these high-capacity batteries as tools to push and pull energy to and from connected vehicles based on demand for electricity at any given time. This extra energy can be used to power houses, buildings, and ultimately anything connected to the power grid. According to official and the Ministry of Infrastructure in Zimbabwe, this move seeks to improve energy efficiency and preparedness for the increase of electric vehicles in the country over the coming years. And ZESCO has completed the 100-megawatt Chisamba solar farm in southern Zambia and has launched plans for a second 100-megawatt phase at the site. Now home to sub-Saharan Africa's largest grid-connected solar plant outside South Africa. The project, built as the largest grid-connected solar facility in Zambia and the biggest of its kind in sub-Saharan Africa and outside South Africa, is now ready to be commissioned. And according to a statement from the company, plans are now underway to develop a second 100-megawatt phase at this site. It was developed by ZESCO subsidiary, Kariba North Bank Extension Power Corp, with Power China working as the engineering, procurement, and construction contractor. And the Angolan government announced the issuance of public debt bonds worth $64 million to finance the construction and rehabilitation of 43 dams in the southern province of Namibia as part of its strategy to raise funds for sustainable water infrastructure projects. According to a statement from the Finance Ministry, the operation called Kisonde is essentially aimed at raising funds in both foreign and national currency and is being carried out in a book building format with original maturities between 5 to 8 years. All right, let's get a check on what's playing out in the crypto market now. We're seeing Bitcoin, that's the major bread in the market at this time, with the other half of the map in the green. And yeah, we see Cardano, Ethereum managed to stay up there 3.18%, even though we're seeing Bitcoin marginally down. It's about 0.03%, nothing to see there. XRP 0.56% down. We see TON also in the green there, going by Coin360, showing the color of the map and the crypto market. Let's look at the sentiment now. How are traders feeling? Looking at the fear greed index, we know it's been quite greedy, for a while, ever since Bitcoin hit that new high. So it's been quite greedy, investors, feeling quite bullish in the market there. All right, let's get a check on the headlines now. We see Trump's social media firm, Trump Media and Technology Group. They've opened a new tab, a plan to raise about $3 billion to spend on cryptocurrencies such as Bitcoin. That's according to the Financial Times. And people familiar with the matter, Trump Media aims to raise $2 billion in fresh equity and $1 billion more through a convertible bond. That's according to those reports. And we see blockchain.com is opening a Nigerian office as part of its expansion into African markets, showing regulatory progress there. Blockchain.com is stepping up its presence in Africa, targeting markets where governments are beginning to implement crypto regulations. The UK-based exchange plans to open a physical office during the second quarter in Nigeria, its fastest growing market. in West Africa at this point. And we also see XRP open interest has soared to $5 billion. Derivatives activity surrounding XRP has soared to a new high there, $4.77 billion. That's the highest level since May, according to latest data from CoinGlass. So major headlines right there in the crypto market there. But let's bring in Rume Ofi now, financial market analyst, to bring us up to speed. Hello, Rume.
Good afternoon, Andy. Good afternoon.
Good afternoon, Rume. So we're seeing Crypto.com there. They're showing interest in the Nigerian market, and it seems they have more attention, that's looking at Africa coming out from Nigeria. How are you seeing that?
The platform blockchain.com has obviously seen something in Nigeria. Yeah, also obviously see something in Africa, and I think it makes a whole lot of sense that this current administration is doing something differently. Because in the past, what we have the then CBN governor calling crypto technology for criminals. We don't have such era anymore. There's a new era, fresh air, where some of the things that we've been talking about, that investors will come to Nigeria and have Nigerians employed or have this industry develop here in this part of the world, is a reality, and blockchain.com is doing just that. The best is here to come. A whole lot of things are going to be happening. A couple of us are going to be speaking more in that light, and I can assure you that the best of the industry in Africa is going to be led by Nigeria as the giant. Is going to be a testament not seen before. A lot is going to happen, and I can assure you that that drive has started. Last week, a couple of things happened. I was in the northern part of Nigeria, in Kano, and a whole lot of young people came out in this industry to be able to learn and understand what this industry is all about. It's quite encouraging, about 2,000 of them, and I don't think I've seen that kind of crowd before, with a very few notice to that event. It shows that this current government is doing something to enable, and we employ them to do more so that more young people can use this to leverage and be at par with their counterparts in the rest of the world.
Quite interesting. So I guess, youth in Kano, they're interested, in cryptocurrency, going by what you've just said. But are you seeing more adoption or signs of adoption coming from, say, some other states around our region?
So Kano is a very populated state, high amount of young people, with about 44 local governments. I see that other states are actually jumping on that right about now. Other states are jumping on that. Lagos is also doing very well. Lagos, the city of Lagos actually was ranked amongst one of the cities with the highest amount of blockchain jobs and crypto jobs. It makes a whole lot of sense. But there's also other states like in the south are getting also, like also in the eastern parts of the
All right, I guess the network is at it again. Well, okay, Rume, I lost you for a moment there. You were frozen, but
yes,
okay, I can hear you now. You're back. All right, you can finish your thought there.
Aside Lagos, we have aside Lagos, Kano. We see that in the southeast, we're looking at Enugu, Anambra State. In the south Niger Delta area, Delta State, in fact, has been ranking very high in recent time, right? And I think it is moving, and it's a trend that I believe very soon a lot of people are going to see that it is not business as usual, but the reality of the Web3 industry, cryptocurrency being also part of it, is come to stay in Nigeria.
Right, and do you think all of this attention is coming because, Bitcoin is, touching new highs at this point?
No. I think what is happening is as a result of the fact that there's a breath of fresh air, although not perfect, that the administration, which promises that they are going to use cryptocurrencies and blockchain in our financial sector when they started, are actually coming up to implement some of these things. Like I said, not perfect. We still have issues of Bitcoin being a security in this part of the world, which we also think is a challenge, but we have to start from somewhere. I think it's as a result of regulation, regulation is very, very key. When people begin to see that the regulation, policy, compliance, all of these goes together, we're going to attract more people from outside, indigenous as well, to be able to push, and also expecting the SEC to be able to make flexible and give licenses to other platforms that have actually applied in its program. A lot is going to happen. A lot of platforms are going to happen that are going to be doing building projects that are going to be tailored to our unique challenges in Africa and in Nigeria, which is going to make a whole lot of things, transactions, seamless transactions using the digital ecosystem.
All right, so let's look at price action in the market now. So definitely Bitcoin hitting new highs at this point, even though it's still ranging between those levels. Has Rume the bear come out to play?
All right, this is a very, very fantastic question. You just got me here. So the market is in between, right? We saw what happened with the Truth Socials, where the president of the United States actually spoke, and the market went from about 12,000 down to 106,000, right? So the market is forward thinking, the market is scared. US challenges is there, a couple of tariff tension is there, but Bitcoin, which is leading now, is ignoring all of those challenges and is moving. In other words, I'm not saying that I've become a bull overnight. The market is also very strong, but we also need to be careful. I always stress being careful because of the fact that Bitcoin has been moving in a situation where the odds are no longer getting steam. The odds are losing value. So for example, an altcoin that is about 40% down and Bitcoin is above his all-time high and is not moving. So imagine Bitcoin dumping about 10, 15, 20%, for example. That means those altcoins are dead. So I'm not trying to be a Bitcoin maxi here, but I'm saying that the market has its mind of its own. Investors are coming in, the BlackRock of this world, institutional investors, are some of the sentiments that we are seeing this volume. Because ordinarily before now, if cases like this are happening, we'll see the market go down the drain. But now is a time to see that Bitcoin has a confidence of its own and is moving at a pace where it actually chooses, but not for the case of the altcoins. But again, market speculators should also consider the fear and greed index and the VIX, the volatility index as well, to check. Then also check for the stable coin index to see if the amount of stable coins that are, if the stable coins market is gaining, it always suggests that a lot of people are losing faith in the market and they're going to dump some of their cryptocurrency, and most especially altcoins. So I would suggest that people should, if they want to invest in the to restrain themselves from coins that are not valuable, not having very good use case, because at the end of the day, their money, the value of their money is going to go down.
So I guess at this point, Bitcoin might be leaving most of these altcoins in the dust, from what I'm hearing so far. But Rume, always great, getting your perspective at this point. We'll see if the altcoins can follow Bitcoin at some point.
Yeah, so the only time where the altcoins can follow Bitcoin is when we check the Bitcoin and Ethereum pair. If we see that it's moving, we can say, okay, for example, the altcoins are going to gain steam. But we're seeing Ethereum actually do something, but I'm really not optimistic about it because it's looking like we're still going to see some downside of the late 1,700 thereabout, or probably as time goes on. But not to say that it has to happen, but with something I'm looking at and a possibility of a lot of people buying from that point. So watch out for the Ethereum Bitcoin pair. If it's moving, altcoin can smile, but it's looking like it's not doing anything well right now.
All right, we'll definitely keep tracking that. Thank you so much, Rume Ofi. Always great having your perspective. Thank you.
Always a pleasure, Ladi. Always a pleasure.
All right, there you have it. Rume the Bear is out there telling us to be wary, at this point with Bitcoin at new highs. But that's how most of the markets we track are looking today. Some are making money, some not as well as the others. But thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now.